You're diamond in an emerald. It took me forever to find you. 'Cause when it's all over, the love that you give will be there to guide you in every way. Now we've been through the cold and darkest days. The summer's calling. Summer's calling. As we wait for the smoke to clear and we watch our dreams appear.
Facebook and YouTube.
I know that we can.
Hey guys, you're watching on Facebook and YouTube. Hit the likes. I'm here with Jennifer Hernandez from Legacy Mutual Mortgage. Subscribe, hit the bell, the notifications, do all the smashing and pushing you're supposed to do, please. That really helps us out and we appreciate it. We have a lot of stealth watchers.
That's good.
We have a lot of stealth watchers. We get,
Awesome.
We get emails like it. So it's weird because and we're not on the radio yet, but it's weird because YouTube will only. It doesn't really tell you how many people are actually watching live, and then on Facebook, it's only people who watch from their phone. It doesn't record people from their laptops.
Oh, really?
So we look at the numbers and we're like, oh, there's only 68 people watching. Yet we'll get a lot. A good one will we'll keep going and going. Or while we're doing it live, there's only 7 people watching.
It's a lot to figure out. My team and I were trying to figure out YouTube Shorts this morning. So.
Well, that's what I have him started doing. Absolutely.
Oh, good. I'll mastermind with him quick after the show.
They're working.
Yeah.
Yep.
Awesome.
Ready when you are, buddy. Hey, good evening. Thanks for joining us. This is Robert with the world-renowned Mr. Texas Real Estate. This is the Texas Real Estate Radio Network. I'm joined tonight with Jennifer Hernandez from Legacy Mutual Mortgage. Say hello to everyone, Jennifer.
Hey.
Jennifer is a good friend of ours and a supporter and a mentor for many, many years. So as Mr. Texas Real Estate, let me just say thank you. If we haven't said that in a long time, we certainly appreciate your support and all your wisdom. So.
Yeah, you're welcome. My pleasure.
Yeah. So we were talking before we got on the air because we have let's talk about teaser rates and kind of maybe define what it actually is. One of the, and we'll go into it a little bit, but one of the things I tell everyone is understand that the loan officer is different than the processor is different than the underwriter. Mm-hmm. And somewhere there's a salesperson hiding under sheep's clothing, right?
Yeah, that's not trained.
That's not trained.
Let me throw that in there.
So you'll hear a lot of these, like we're just looking at a 30-year refi. And, if you go online, it'll tell you it's 2%, 2.25%.
Yeah, that's sexy. Who wouldn't do that?
2.4. Yeah, let's do it. And then when the sheet comes back to you, you get your term sheet and it's 3.25%. You're like, well, what happened? So in our world, in your world specifically, there's a lot of teaser rates. So I want to explain to the folks what that really is about.
Yeah, sure. So Jennifer Hernandez, Legacy Mutual Mortgage, Loan with Jen, all my handles, social media, everywhere, including my YouTube channel. So just a quick, commercial, but I have a pretty advanced YouTube channel with a lot of videos on it. And my point is not to be a YouTuber, but it's to be educational. No, I mean, if I monetize, that would be fun. But
right.
I do it for credibility, and
Sure.
I do it to just put in one place the truth, real facts, no BS. So go to Loan with Jen. I've got several on there for investors, but just one about rates.
Right.
And I'll probably make another one after this thing today about what's real and what's not. So let's go there. So teaser rates are probably real somewhere with a bunch of points added to them. So The point, it's just advertising 101. It's you need to be attention getting. And advertisers, whether it used to be newspaper, TV, now it's online, let's be real. There's certain parameters that they have to go by.
Sure.
That they have to put a rate, and then they need to put the APR, which is the real cost of the money, really, once you add all the costs in. So when it looks too good to be true, I think that it just needs to be further investigated. So definitely getting things in writing. The biggest thing that we hear when people call us and say, oh, why am I seeing this, is do they know your credit score? Do they know your debt to income? Credit score is the biggest thing. And we could have a whole other hour show to talk about what people think their credit score and what their mortgage credit score is are two totally different things. But let's just leave it at credit score for right now.
Sure.
So if you're shopping online and you're looking online, because it's super tempting, it's on every website, everywhere that you go. Why wouldn't you, right? It's only as good as the data that's input into it. Is it a primary residence? Is it investment property? Is it a second home? What are the definitions of all those things? Has someone really talked to you and let you know which category are you in? There's some people that think, oh no, this is my second home just because it's the second home I've ever bought. And it's a second home that's down the street. This is my favorite one. Oh yes, we're buying a second home. Oh, okay, great. Like, are you going to the beach? Or, oh no, it's down the street. No. Second home definition, because people just don't know. They just don't know.
No, I get it. That's a good.
So
one.
second home, it's actually the one that makes me laugh the most. But second home from a lender's definition is vacation home. You cannot vacation down the street.
Sure.
Okay, it doesn't happen. So the use of the property is super important. So when you're scrolling online, inputting what you think might be the right data, is it really? Is your score really 800 or is it 720? So rates will change depending on the score. So as an advertiser, if I was one, I wouldn't put teaser rates on there that weren't true, but they're putting the very best scenario. If you hit all the bells and had the highest credit score and were escrowing monthly, there's a cost to waive escrow. Did you know? Assume you're closing within 30 days. What if you're closing within 60? Assuming that it's primary residence. So there's all these little things that add up to what you're seeing. And so once you get all that straight, you really have to apply. You really have to give the lender for a true, accurate quote and not be blindsided by, oh, well, once we got your application, we realized that this really is an investment. What we were quoting you was a primary.
Sure.
So if you want to just save yourself some time, just know that within a 30-day period, you can apply anywhere, and any pulls of your credit just count as one. Watch my video on Loan with Jen on YouTube called The Truth About Credit Inquiries. Just go search for it, okay? But it'll tell you it's a 13-minute video about credit and how it works and real scores and whatever. So the truth is, what you think your credit score might be is maybe not what it is. And if you're doing a cash out transaction, that's another layer of what the real rate is. And did you know that in all 49 states other than Texas, cash outs on your primary are looked at differently than in Texas? I'm happy to go into why, but for right now, I'll just tell you that it's different. So when this out-of-town lender finds out, like they're in Ohio, nothing against Ohio, they're just not in Texas, and they realize, oh, wait a minute, you're in Texas. The rules for cash out in Texas are harder than in other states. So we actually either A, don't do cash outs there, or B, that rate that we were quoting you is different because lenders view cash out in Texas as riskier because of the laws. And so we're going to just change the rate on you. So that's number one. Number two is it's very likely that the person that let's say you call the number online, whatever it is, XYZ, and we're not going to mention names here. And you call them You are getting someone, because my baby cousin worked for one of them, which will remain named unnamed. And his job was to literally robocall 1,000 people a day. So he sat at the phone, similar to sitting at a desk like we are here. And they were logged in, and it fed him numbers for all the people that inquired online. And it was his job to move people to the salesperson.
Yep.
And so he was just getting interest from whoever would say yes, and he would transfer them to another person, which we don't know how long they've been trained. And then, so as you move through the process, the person on the front end that you're talking to, I don't know, maybe they missed asking you if it's in Texas on a cash out.
Well,
are you like, is your head going to explode yet? Or
well, so I didn't think we'd have very much to talk about, but now I think we need 2 hours. Guys, this is Robert with the Texas Real Estate Radio Network, and we're here with Jennifer from Legacy Mutual Mortgage. We'll be back.
Sorry.
No, that's good. So I want to talk about the escrow cost. I want to talk about the any FICO pulls in 30 days, but is that specifically like each bureau, right? One pull per bureau, not...
No, we pull from all three. So we'll do credit. What we'll do, maybe let's
and then I want to know why it's different in Texas, because I plan on making a lot of money here.
Let's just finish the thought that who you're talking to might not be the final decision maker.
Oh, of course not. Yeah,
then we'll just go into, hey, you have questions. And then let's talk, you want to talk about equity and why the equity
Texas,
loans?
yeah, for sure, yeah.
Yeah, and then
we're
going to be a whole hour right
there.
there.
Yeah, we're good. Hey guys, welcome back. This is Robert with the world-renowned Mr. Texas Real Estate. This is the Texas Real Estate Radio Network. We're here with Professor Jen, who is from Legacy Mutual Mortgage, who's going to be, and it's going to be Loan with Jen. Just go check that out on any social media, and you also have loanwithjen.com.
Yeah, and it's loan singular, not plural.
Okay,
LOAN with Jen. Yep, Loan with Jen is all my social media, YouTube, look me up.
Great.
I've got over 250 videos of lots of different topics.
All right, so let's go into the sales, handoff, all that good stuff that's happening in your industry.
Yeah, so what happens is if you're with, let's say, an online or even a larger lender, who you talk to initially, they might not really know the guidelines. And so once you get into the process, things could change. And how can you guard your way against that? It's really impossible. Like there's just not a maximum number of questions that you would have to ask. As a consumer, you're just assuming that everything's going to be okay. And you're assuming that the estimate that you get in the beginning...
It's a big national name. It's a big brand. They must be following the rules.
You're assuming that what you get on the initial loan estimate, you gave it to me in a loan estimate, but then there's something called a change of circumstance form that's kind of a counteroffer.
Oh, that's nice.
That, the loan estimate does not mean that it's an approval. So then it gets to an underwriter...
Jennifer, wouldn't it be nice to have the change of circumstance form for anything in your life? Like something comes along, you're like, hold on a second, I'm going to change.
Yeah, I'm going to just send you the DocuSign for the change of circumstance form. But
I
in
no
lending,
longer want the stock.
In lending, that's right, that would be nice. So that's really what happens is it gets to the underwriter, and they're the police.
Yeah.
They're the ones making sure that, the income that you put in the application, you apply online and you put that you make $6,000 a month, but when we got a hold of your paperwork, we chopped it down to 4. And now your debt to income ratio is this. So all of those things happen, right? So all lenders go through the same thing. Some of us just do it faster than others. So what I'll say is, it's always good to get a second opinion. Yes, paperwork is painful. And yes, applying online with 2 different people, let's say with us and someone else. However, we just this morning we were the backup plan. She went with her current lender, who's a big name. And it's just super silly, but her husband is self-employed and they couldn't get a hold of his extension for the tax return. And I said, well, can't you just, that's true. We have to get proof of the extension. IRS is behind. They can't get it. I go, can't you just qualify? I've got your data here. You applied with us 2 months ago. Can't you just qualify on your own? You're W-2. Can't we just ignore him and delete him? And she says, right, I know. Why can't we do that? So they weren't thinking out of the box.
Sure.
It's kind of like they just can't they can't think that far.
Yep.
And so she's like, nope, they can't do it. I'm like, all right, here's the rate. Let's lock and load. She's like, all right, let's do it. And we're moving on.
I will tell you and I get some questions, but real quick, I don't know if you ever had a chance to meet my wife, but my wife, I totally hit the wife lottery, right? She's MIT undergraduate. She did Michigan MBA. She's worked for Google. She's super, super smart and very...
How'd you manage that?
I caught her in a very susceptible moment, and I pounced, right? So,
cool.
And it's absolutely one of the assets I have in my life, just perfect, So I look at her more as I always say she's more of an accomplice than a wife, right? So everything that we do, she's a part of and very much into it. But she has her own portfolio. That's her own real estate portfolio, and she called the lender up, and he said, "Well, why isn't your husband on the application?" And she said, "Well, these are my rental properties." And he said, "So you have your own properties that your husband?" And she's like, "Who am I talking to? What year is this?"
1962.
So it's like, well, little lady, that's pretty bold of you to buy your own rent.
Wow.
And that was a fun conversation she had with someone who's just that entry point, right?
Yeah, the entry, they just don't know. They haven't, and again, there's lots of great people out there and budding salespeople. I'm not trying to put anyone in a light, but it's all about training. There's a difference between training and by the book and then reality of what happens on the front lines, right? It's like we're on the front lines. And I don't say this to brag, but I've closed over 4,300 loans. I just passed 4,300. And it's taken a lot of years. It's 26 years, but I've seen so many combinations. Yeah. And I'm still not 100% right all the time. I just went to battle with my team the other day on a piece of documentation that I thought we didn't need. And they're like, oh, yes, we need it. But, I'm quick. Like, we pretty much underwrite it in the beginning because we know what goes through and what doesn't. So I don't wait to tell people about the change of circumstance form. I do it within a few days of them getting us paperwork. Like, it doesn't have to make it to underwriting for me to know. But I'm just one lender, right? So there's lots of lenders out there. I think that at the end of the day, consumers are doing what they think is best for them. But I think that ask more questions, get a second opinion, be prepared to give your credit and documentation to at least 2 places so that if your first plan doesn't go as planned, you're ready to go. And it's especially if you're purchasing a house, like on a refi, you're in the house. Like, what does it matter?
Right.
But when you're purchasing, like, you don't have to, or you're in a hard money loan, you have no time. Like, time is money and you could lose out on a contract.
Yep.
So have plan B going.
Yep.
And have them just sitting there. It's, it's okay.
We learned that lesson the hard way.
Yes,
That was
absolutely.
$25,000 lesson.
Oh, my guy, take a picture. Oh. Sorry.
It's okay.
I'm waving at somebody.
No, it's fine. All right, let's talk about 2 things. Let's do a whole segment on the whole Texas stuff. We do explain the FICO pull and how it only counts as 1.
Yeah, so in summary, firstly, there's over 25 models of FICO.
Sure, and we're looking at 2, 4, and 5, right?
One of them is like classic V8, and I just can't even memorize. They change frequently. So lenders, the thing you need to know is that lenders all pull the same model.
Yep.
That's how we can sell loans in between each other, because I know that if I sell a loan to this person, or sell or transfer the servicing to this company, that they know the integrity of the score is the same. So when people tell me, oh, I've got this online service and, remain nameless because there's so many of them, but I get my credit through so-and-so. Okay, great. And then we pull it and it's like 60 points different. Yeah. And they're like, what? It's because the algorithm or the model, the filter, you can call it a filter. Think of just water running through a filter and it's blocking certain things and it's letting other things through. So that's the first thing that they need to know, is that what they necessarily know to be their credit score might not be. So that's why you need to get with a lender as soon as possible. But within a 30-day period, any pulls from a mortgage lender, there's a code that when we pull credit, the bureaus get. knowing that it's a financial institution. And so any pulls from a financial similar institution only count as one.
Oh, interesting.
And it's the same when you buy a car. Mm-hmm. It's a car company. It's an auto finance. It's a code. So, and when you're going to shop for a car and you're shopping with 3, 4, or 5, whatever, even though it shows a ton of inquiries, like it shows a ton of line items, the score hit is only from the one. Yeah. So that's how it works. That's really hard information to find, unfortunately, but it's it's true.
That algorithm is proprietary. That's how they make their money.
We pull 60 to 70 credit reports a month. So I mean, we've seen it happen in real reality that it doesn't. Pulling your credit doesn't dive your score. Pulling your credit from a lender pulls your score as it is right now before the pull.
Got it.
And your score won't change for 45 days. So we've got 2 little windows working here. But the point is, within a couple of weeks, get your shopping done. Be prepared to disclose information. Be prepared to upload docs. If you want a pre-approval, you get what you ask for. And if you think you can be pre-approved or given a rate or thinking that you're going down the right direction without submitting documents, you will be sorely surprised.
Got it. Hey, guys, we're going to come right back from this break here. This is Robert with the world-renowned Mr. Texas Real Estate. Hang tight. We'll be back.
My guy brought me my computer because I left the office without it. I was like, hey, can you make a field trip? And then I was like, hey, take a picture for social media. So have you guys started doing YouTube Shorts yet?
I just gave him a whole bunch to do, yeah.
We just started, yeah.
We work with a guy named Casey out of California who's been all over this stuff. He said he got his long, drawn out, really intense things are getting, less than a couple thousand views. And he said he did his first couple shorts and he's like, I got over 10,000 just people watching.
But when you go to YouTube, how do you know to watch a short?
They're feeding it to you.
And I think because it's so new, there's less people.
Yep. So I don't know if
now's the time to get in.
Yeah, I did the 5 fears, I think. I don't know if we've ever cleaned that up. We should break that down into shorts. Yeah, for sure. Yep. Ready when you are.
Interesting.
Hey everyone, welcome back. This is Robert with the world-renowned Mr. Texas Real Estate here with Jennifer from Legacy Mutual Mortgage. Loan with Jen everywhere.
That's it. Website, YouTube.
Hashtag, all that good stuff.
All of it.
Excellent.
Loan with Jen.
And you have a really informative YouTube channel that people can go check out and probably smart to start picking through some of those videos before you're lining up a refi or getting your first-time home buyer, getting all that stuff done. So it's really important. All right, let's talk about Texas because you brought up a really interesting point that in 49 of the 50 states, pretty much refis are standardized, if you will, except for Texas because we always have to be a little bit different here.
Yeah, we're special.
Yep. So explain the difference there for folks like me who are building a portfolio looking at refis as a banking system for the rest of my life.
So what I'm about to talk about is only on your primary.
Okay, good.
So when your investment, it's the same countrywide.
Oh, I'm good.
But we have a lot of investors that you guys send us actually, thank you, that they want to cash out on their primary, especially with all this appreciation and especially before capital gains goes up. They're like, ooh, let me cash out on my primary. So whatever the reason, if you're going to cash out on your primary, just the super quick history is until 1998, you could not take cash out on your equity in Texas. And it just goes way back to the 1800s, really, to where the good old boy land is your gold. The mentality around the legislators.
Why would you ever want to do that?
The land around the ideology around the legislators is we don't want people to put their homestead at risk because that's everything.
I can see it.
Now, so when 08 happened, it was really great that we were all maxed out at 80%. So fast forward to 1998 or rewind from right now.
Sure.
1998, it's paragraph A6 of the Texas Finance Code, and that's the area that allows for equity to come out of your home. However, there are stipulations, which I won't cover in this whole entire. In fact, I'm gonna make a video about it. Home equity. But bottom line, max 80% loan to value. So you cannot take over 80%. So in all the other states, you could go up to like 100.
Yeah.
So that's one big difference. And in short, the reason that lenders don't all participate in the Texas cash out loans for your primary home equity loans is because it's so borrower friendly that if we as a lender don't cross a T or dot an I, literally and the client is smart enough to figure it out, if we make an error, the loan is forgivable 100%. They do not have to repay. So because of the risk, many lenders have opted out from doing primary residence cash outs in Texas. And furthermore, the ones that are, so let's say you take 100 and you divvy it down to 5.
Sure.
Okay. So there's a lot of lenders that, well, from the national lenders, let's say that there's the big 15.
Yep.
There's like 4 or 5.
Wow.
So, I mean, it's a smaller percent all doing it. So it's important when you're doing this online quoting for a cash out, they might think you're in one of the other 49 states.
Sure.
Now, there's probably a filter that says Texas, but also you have to expect that the interest rates are higher. So because the lenders that are here in Texas doing it, there's a uptick on the rate because of that additional risk. So it's about 0.2 to 0.3 higher than a regular refi of just like a, rate and term.
So what's funny is when you analyze the risk, essentially what the risk is from a bank's point of view is my employees will screw this up.
Yeah, we're going to make a mistake.
We're going to make mistakes,
Yeah.
right? So we're just not going to do it.
Yeah, so we're just not going to do it.
Wow.
Because we might not have the oversight. Like, we're not a 100% Texas lender. Like, we're fine because that's almost all we do is lend in Texas.
Yep.
But we're totally fine with it. But when you're not,
Sure.
and the fees are a little higher, title and policy higher. So getting with a Texas lender that knows this, if you're going to do a cash out on your primary, is definitely the way to go. Because they could say during underwriting, oh, hey, we just figured out that you're in Texas and it's a little bit different.
Right.
So
Going
you
back
just
to the
never
last
know.
segment, if that takes too long, you're losing that 30-day window with your FICO score. You got to go to someone else and
time
pull
is
it.
money. What if
Yeah,
you're getting
absolutely.
cash out to purchase an investment property cash? What
yeah.
if you're paying off a hard money loan? Like there's, time is money no matter what it is.
Sure.
Or you're waiting to give the money to a contractor to fix up your place, to sell it or whatever. Like there's so many different reasons. So I just think more than ever, we started talking about teaser rates. I think from I've just literally dumped a bunch of underwriting guidelines on everybody. I'm hoping that the takeaway is, oh, wow. There's a lot to this. Yeah. Like, it's behind the curtain. What really goes on is a lot of details. And it's easy to think as a consumer that we're just talking about an interest rate. How hard can it be? But if the lender can't get it closed, it doesn't matter. In fact, I did a Save a deal last week, a different one. And the lender was giving him, let's just say the rate that we locked him in at was 0.5% higher than what he was getting. And I said, look, man, I'm really sorry, but I just can't match that rate. And he says, well, listen, you can't match something that doesn't even really exist because it was so painful. We weren't closing. Like it wasn't going forward. So it's only a lower rate if you can perform on what you think that you're getting. So I'm really not missing out on anything. I just wasted 45 days with, this company, and his words were they don't know what they're doing. He mentioned maybe a couple of other bad words, but I just let it go in one ear and out the other. But, a low rate is only as good as the performance. So do check online, reviews. And there's some out there that, listen, they do a good job and they do go to fruition, but there's some that don't. You've got to see what their performance indicators are based on what they advertise, based on what's closing. So
We got a couple minutes left here in the segment. When would you or would you not recommend to buy down the rate?
It really I think 1%. So if the loan amount's $200,000, 1% buy down is $2,000. 1% of the $2,000. If that 1% is buying you 0.25 to 0.375 in rate, I would consider doing it if you're going to be there for 5+ years.
Gotcha.
Otherwise, save your money.
Gotcha.
Buy furniture or do something else.
Yeah.
Or, it just, the only thing I'll mention is that with investment properties, the way pricing is these days, depending on the credit score of the person, there's kind of a forced points to where we can't price it unless we put points on there. So it's a delicate topic.
Sure.
So you just need to check with a lender as soon as you can, to get what the options are.
So if you're going to keep it for more than 5 years and you're getting at least 1/3 of a percent, 1 point equals 1/3 of the percent, you would consider it.
0.25 to 0.375 in rate reduction.
Gotcha.
For that 1% of the loan amount. So for that $2,000 in a $200,000 example, that's what one origination or 1 point is 1%. It's not buying it from 3 to 2. That's not what that means.
No, you're done buying it from 3 to 2.75 for
right
1%.
For a 1% fee, which is the $2,000. Yeah.
Got it. All right, thanks, guys. Hang tight. We got one more segment coming up here with Professor Jen here from Legacy Mutual Mortgage. You want to check her out at Loan with Jen. That's Loan Singular with Jen. That's our hashtag. It's on YouTube. It's on Facebook. It's on the internet. Make sure you're going to check her out, and we'll be back.
There is another one that's plural, and that's why I say it.
Got it.
I've had clients get there, and I'm like,
Who's this woman from Colorado?
They're like, we made application, and I'm like, you did? And they're like, yeah. I'm like, I don't think so. So, and I'm sure she's great, but she's not in Texas.
I was going to say, it's like, hey, I'm trying to get a Colorado lady. Hey, welcome back. This is Robert with the world-renowned Mr. Texas Real Estate. This is the Texas Real Estate Radio Network. Hey, if you guys want to check us out on our website, go to mrtxre.com. MR is in Mr., TX is in Texas, RE is in realestate.com, mrtxre.com. We got a lot of events coming up. So we're chatting tonight with Jennifer from Legacy Mutual Mortgage. We talked about a few things. What was the last thing we were going to talk about?
We were going to talk about charity.
Yeah.
Or you wanted to know about how long do we have?
Oh, we got 9 minutes, so 10 minutes here. So let's talk about the escrow process.
Talk
that
about escrow.
Costs more.
Yeah. So we don't mean escrow like title escrow because in some states the title company is called an escrow company, so they're interchangeable.
Yeah, I'm from California.
What I mean is a different kind of escrow, which is tax and insurance escrow.
Sure.
So the short and skinny of it is that when you put 20% down or more, you have the option and the right to waive the escrow account, meaning you can pay it annually on your own when the bills come due. So you just handle it yourself. The only thing is that when you choose to do it monthly, there's an incentive. So lenders like you to do it monthly, not because they think they're earning interest on your money. It's actually illegal for that. They cannot earn interest. They cannot earn interest on your money. It's not theirs.
Sure.
But it's a confidence that they have that
Setting
the loans
routine,
it's a routine and they know the bills are going to be paid, and you're less likely to foreclose for non-payment of taxes and insurance. So you're less of a risk when the lender is controlling escrow and it's part of your payment.
Nice.
So when you choose to waive it, then it's taking away that incentive.
Do you think most people even understand that option? So it doesn't really. But the default is we're gonna escrow it.
Default is I always tell people, hey, are you willing to do this because your rate is better?
Yes.
Some people go for it and some people don't. Some people say, why are you penalizing me? I'm like, no, we're not penalizing. We're just taking away the incentive. We're rewarding the people that do it monthly because they're less of a risk. Well, but I have an 800 credit score. No, I get it. But what if you're traveling and you forget to pay it and it's not done.
So right along with that, help me understand why or why not aren't HOA fees not incorporated into the... Why wouldn't it be PITIH?
Yeah, so I've been able to do it rarely when the HOA won't subordinate to our lien.
Right.
But mostly, I think, and I've done so many loans that I just sometimes robotically go forward.
Yep.
I believe that it's because it's just, there's so many of them that it's just a hassle.
Sure.
Most homeowners associations are run not 100% efficiently because
What?
there's, should I say this out loud? They're smaller usually, and they're run by third-party companies, and sometimes those companies change. I just think that it opens
If you're
up.
lucky, it's run by a third party.
It opens up a lot of room for error, and
Okay.
county taxing districts are pretty straightforward, right? But the HOAs, lenders as a whole, just don't get involved with it. But I'm gonna really research that. Because I've just never really asked the question, but just based on my 26 years of knowledge, I'm thinking that that's what it is. And when I've done it before, I had to really get an exception and be like, we don't like to escrow, because lenders, the servicers, just don't want to do it as a whole. And I believe that that's why is that usually some of them are volunteer run and no management company and a lot less oversight than a government entity like taxes, right? It's much more, and then the insurance is State Board of Insurance. So I think that that's why, and I guess they trust that buyers are going to pay it. So.
All right, I was just curious because I know when we talk about seconds and thirds in California, HOAs can seize your property. There's a process, but...
It's a painful, and I was on a HOA board, and it was like pulling teeth. It was very hard to foreclose, in Texas anyway.
Yeah, a little bit different maybe in California. That's why
I'm going to make a video, HOA, why not escrowed?
There you go.
No, I'm going to research it because that's a good question.
So we sat down before this. We talked about some of the charities that you were working with and some of the programs you're working with. So let's spend a little time with that.
So during COVID, I made a decision, really with the help of a client of mine, when I gave her this little, I don't know, I mailed her something as a gift. I give a little gift to people just to say thanks after closing. And she says, "Hey, I really appreciate it, but I really don't need more clutter." And I thought about it. She says, "Hey, instead, do you mind donating, some money to my favorite charity?" And for her, it was like a local SPC, like a dog thing.
Yep.
I'm like, "Of course." So I did it. And I thought about it, and I thought, you know what? None of my clients need things and clutter. And it's a time when we need to be more generous. Yeah. So I made a commitment at that time that at once a month, at the end of the month, I was going to take the number of closings I made times $100. So I was going to I normally don't give clients $100 gift, okay? But I was going to make a commitment to be more charitable. And I always, most of the time, it's local charities. Sure. So I've got a core 3 to 4 that I rotate around. And what I do is I do it. The client doesn't get to choose. I do it. And then I do a video telling the clients what I've done.
Nice.
And so, so far this year, I've closed 227 loans.
Wow, that's
so that's
great.
$22,700.
That's excellent, yeah.
So I'm really proud of that what my team and I have done is able to help change the planet one little local community at a time.
Awesome.
And I've also, so there's a few that I'll mention in a sec that I rotate around. And then I ask clients after I do the video, I say, "Hey, if you have one that you're passionate about that's a local charity, shoot me an email." And some of them do, and I'll add it to the list the next month. And then I'll snapshot them that I've done it, like, "Hey, I just supported your charity." The ones that and again, local, I just believe that boots on the ground is what really makes stuff happen. Yep. So I'm big supporter of cancer. And so my sister and my mom have both passed from cancer. So there's Nancy Owens Breast Cancer Foundation that I'm actually on the committee, 12 years going. Right. Donated over $100,000 personally in the 10 years. So I super passionate. So they get some of my money. Cornerstone Family Ministries, Katy Christian Ministries, West Houston Ministries is a local. Food Bank, we do the Food Bank.
Great.
And then Kids Meals is a great.
Wow.
So all of these revolve around helping. Some of them are big on helping like homeless and
Sure.
I'd love to talk about all of them, but West Houston Ministries is kind of the West End food pantry. So it really helps people get food on the table. So check it out.
Fantastic. Well, that
Yeah.
is, I'm a big no-kill animal shelter guy. That's where most of my money goes to.
Awesome.
Well, thanks for coming in. This
Yeah,
is always
thank you.
really good and it's always so informative.
Thank you.
I think we all learn a lot when you sit down and spread some of your knowledge. It's really good.
Yeah.
Let's give them the contact information one more time.
Sure. Loan with Jen, all my handles. That's LOAN with Jen. YouTube, Loan with Jen. Please check out YouTube. Click the bell, subscribe.
Smash,
it's
like, love,
It's
all
just
that
a
good
labor
stuff.
of love. I don't want to be a YouTuber. I just want to be informative.
Gotcha.
It's like your own little search engine. Real facts, no BS. And then my website, Loan with Jen. If you need to email me, ask a scenario or something, emailing is probably the most efficient, fastest way. And then we'll schedule a call.
Fantastic. Well, thanks again, Jennifer. This has been Robert with world-renowned Mr. Texas Real Estate. As always, thanks for listening. We'll be back tomorrow night. Thanks.
Thank you. That was fun.
Fun. Thank you. Yeah.
Yeah, it's funny. I always